Good morning, everybody. This is Patrick MontesDeOca, CEO of the Equity Management Academy. On this segment here, we're going to go right into the live trading room in TikToker, where we are live streaming live the VCPMI indicator. We're using this indicator for us to trade in the metals markets in gold, silver, and the mini S&P. And as we take a look at the market in gold trading last at 1854.10, it's up $22 here. And just to review here the last recommendations here that we've made, if you've been watching my videos here every day, we recommend it for you to get long, to go long, to stay long, to buy this correction. And we've been long since 1767. We have completed the sell to level of 1858 as we speak. And obviously the market is substantially higher across the board. This morning, we pretty much locked in a swing long position that we carried in the futures and liquidated that position based on the target that was accomplished and made $3,350. And we are right now, we've taken a flat position in the futures as the market in the futures is pretty much completing all of the targets anticipated. Right now, it is in a short mode from 1858 on the weekly level. And if you're just joining right now to day trade the market and you don't have a position, then what you want to do is you want to wait until the market activated at 6:45 a.m. a trend alert, and that right now it is recommending to go short. It's activating a short signal. Your stop can be 58. The market for me is a little bit rich right now, more than $300-400 away from my entry point. I'm going to let it pass until the market rounds up as close to 1858 during this next 15 minutes, and I will evaluate if I want to take that risk. But so far, we've locked in profits on the long side, and we've locked in profits basically on derivatives that we've been carrying here, like GDX, SILJ, SLV. If you came in long and we pretty much have accomplished targets here, so you want to go flat on the positions that you came in long, and lock in balances, lock in profits for the time being. We are traders here. What I'm teaching here are for those that are serious day traders that are looking for a methodology that is effective, consistent, and it does produce results. And so what I'm showing you here is, as a self-directed individual, how I am applying this information. I am teaching this information to my subscribers, my clients here, traders, in how they can use this information themselves and pretty much control the destiny, you might say, of your profiling, your balances. So we've accomplished, as of this morning, I just want to share with you that coming into this this rally here, it really elevated the equity side of our open portfolio that we're carrying. And I think it's fair to say that as of this morning, we crossed the $1 million profit mark. And coming into this morning, we had a estimated profit of 966,634, and with the opening this morning, pretty much all the open positions that we have are gaining quite a bit, and our realized profits are 1,765,194.50. These are closed out positions. We are carrying open positions, and we have the balance open, liquidating balance so far. I believe it's at about $1 million. This balance was accomplished with an initial investment of $250,000. Now, I wanted to show you this because what I do here in the room is exactly what I trade. The difference is that, my profile may be different than yours in terms of risk, in terms of size, but the fact is that the algorithm does work, and it is producing some remarkable results as far as, I'm concerned for my account. And so it's important that you understand that what I'm doing here is I'm sharing a technology, I'm sharing a methodology that I apply myself here in a real account, in real live streaming here in TikTok, which is one of the great things about this application, this platform, this idea that we can do it all and do it all transparently. The fact that I'm using a simulated platform is irrelevant, because if you have a real account and you're following the methodology, at least that I'm sharing here for this hour, you should be doing pretty well, But I do have a private trading room that I bring all of my traders, and I share pretty much this intelligence literally 23 hours a day. And so today is a great day. If you've been, again, following what we've been doing, it is a great time to be consolidating your gains, consolidating your profits, locking in your balances, and allowing for the market to take us to where it wants to go. So let's just allow the market for a little bit here to trade, and we'll take a look and see if we are getting activation on any of this levels here that we have today. we're letting the market trade here for a little bit, and I want to see what the volatility does, what the momentum does. We've locked in quite a bit of profits this morning, but we're at the sell level here, the sell to level on the daily at 1858, and I want to see what the action is this morning into this level. If we see more supply come into the market or more buyers come into the market, and I think that's going to be reflected in the price here as it trades into this level. If we get through that 1858 and above, with enough buying power, it could bring this market up to about 1874, which is the weekly level. The daily, you can see it's 1857, and that's pretty much where the market is. This is the sell to level. It's 1858. We're at 1856.50, so we've activated a trend alert in at 7:15. If it closes below this level of 1858, it's going to be activating a short trigger. And that's what I was waiting for, is basically on this signal here to allow for the market to get back as close to 58 for me to enter into this trade if I want to take this short trigger. The market is pretty close to 58. So I think we're going to sell one here at the market. And the protective level is 1858 on a close above it. If it closes above it, the conservative stop is a close above it on the close of the next 15-minute bar. That's the most conservative stop. You can carry an open stop, which is $1 maximum dollar risk based on your profile, or you can wait till the end of the day. The sell-to level of 1858 is a 50-95 standard deviation to the relative implied volatility to the mean, which is 1840. The thing that I see here, and I'm very cautious, in fact, and I would use the close above 1858 if it does stop me out conservatively, because if you're taking a look at the right side of the chart, the market activated a weekly bullish price momentum now, because it's trading above the average weekly of 1849, and also it's trading above the daily average, completed the target of sell one, and it's in the pattern of completion of the daily by basically accomplishing the 1858. If we do close above 1858, then the 1874 is the next target. And that's the weekly signal. So it's a little bit tricky here as far as what to do in terms of short-term trading, but in a swing position and on my bigger core position here, I'm carrying longs. I am synthetically long the market, and I want to see actually what the market does at 1874 before I decide to unload some of those positions if I want to reduce my exposure there. But we're up almost $100 from the low that we made of 1767 just a few weeks ago. So this is the kind of volatility that we're trading right now, which is just fantastic for traders. This is a trader's dream come true. What you're looking at is basically the Fibonacci fan trend lines here that indicate the market resistance levels. They coincide with the code area of distribution of supply above 1874 all the way up to 1941. And that matches pretty much the third Fibonacci trend line, as you can see here, which would be almost another $100, another $100 higher from here. As I mentioned yesterday, if this is the completion of the second wave, okay, the first wave gave us approximately over $100 from 767 to 1879. And if this is the second wave, then you're looking at the third leg doubling that amount, according to Elliott wave measurements. And so, but what we want to see is if, in fact, this is the beginning of the third, or an ABC pattern that points to another correction test at the lower end of this band, which is into that ideally 1818, 1819 level that we saw here last week. And as low as 1806, if we were to see this inversion back down into these levels here, I would recommend at that point to load up the truck, basically. I think the market is going much higher. I don't think it's priced in the tremendous damage that the market, the pandemic has done to the market. And what you're looking at is the market volatility expanding because of this tremendously. Trading $100 in gold in a matter of days was not the norm until this pandemic came in. And so now we're getting, $100 moves in $200 moves in a matter of weeks, which is unbelievable. So again, from a trading perspective, it's a phenomenal market to trade the volatility, just like we're doing with a GBTC or Bitcoin, Grayscale Bitcoin Investment Trust, that we are trading the volatility. We are trading Bitcoin Investment Trust, but we are accumulating gold. This is the opposite sentiment, basically, that everybody out there is um, projecting that the Bitcoin is the new currency. And I think you're going to find a lot of disappointed investors that have run into the sector, which is essentially a virtual asset. It's not a currency, it's a virtual asset. And you want to trade it as such. But if you think that's going to change the currency element in terms of a tier one asset, it could be potentially happening, but I think it's going to take a long time, and a lot of politics are involved. And I think the first thing that is going to happen is that the powers to be are going to come into this market and are going to take over and control the regulation aspect of this market. And it would not be surprised to see some kind of regulation being implemented, particularly if the governments come out and produce their own virtual currency. I don't think that they would enter into a market with highly competitive sources that are independent than the controlling system of a regulated environment. And so it's a big risk for me in terms of, the volatility I trade. As I said, I trade the Bitcoin, the GBTC, the Grayscale Bitcoin Trust, and we've made quite a bit of profits in this, but I'm putting it all back into the gold market. The gold market has been God's money for thousands of years, and it's going to take a big shift in the paradigm, you might say, of history for another unit classified as a currency to compete with gold and silver. Gold and silver has been around for thousands of years, and it's been used in times of crisis economically, in times of pretty much fiat currency implosions, as we have seen throughout history. And we don't have far to go, to see, pretty much some reference, some points of reference in terms of what stimulus, or you might say the creation of fiat currency artificially, or the creation of a supply of a particular product, what it does to the relationship of supply and demand. In this case, we're talking about the US dollar as a currency, and the tremendous amount of money that's needed to be printed as a consequence of this pandemic, which was not anybody's fault in terms of Main Street. And yet, I kind of can't help to question how convenient this pandemic has been in times now where pretty much the system has broken. The old physical system as we knew it is completely demolished, is completely broken. And we are in the midst of a transition, basically, from that physical world, you might say, or physical economy, into a highly virtual economy that obviously is introducing a whole new framework, you might say, that has, at this point, zero debt in the virtual currency market. And so I have yet to see what is going to be the policies, you might say, of some of these leaders with regards to the reset that they've been talking about here, which come January, I believe the World Economic Summit here is going to present in Davos. And so my curiosity, you might say, is whether if they are going to introduce some kind of a virtual currency, is this currency going to be backed by some kind of an asset, a precious metal asset, or is just going to be another virtual asset provided, again, by our government in the very same way that fiat currency is issued. And, if that's the case, then I think it's going to validate what I believe is happening, is that they are going to continue to maintain the world economy into a debt economy. It's impossible at this point to just get out of this debt economy without any economic recovery on a global basis. And if we look at the, our own economy here, we have yet to see the impact of the damage caused by this pandemic economically, with regards to unemployment, with regards to every sector in the economy. And even though there is a lot of optimism about the vaccines being implemented, and that's fantastic that they were able to expedite the process, in less than 1 year, which has never happened in the history of medicine, that they've been able to accomplish this. But in the meantime, the damage that we have to go through, the cleansing process that we have to go through until we get to the other side, is going to be very painful, particularly for just about every sector in the economy. And so, additionally, we have this lockdowns being implemented during this holiday season. And so it is really incredible to imagine, how this physical economy is going to be reflected in the statistics, as much as the virtual economy that seems to be exploding, you might say, according to the latest statistics, replacing, again, what I believe is the old economy. We are moving into a completely virtual world, a virtual economy, and we are going to need virtual currency that will represent the status, you might say, of technology at that point. So there are big changes that are taking place. A lot of fast changes taking place in the world economy and our own society here, not only economically, but also politically. So it gives the gold market another level, another dimension as a risk asset, as a risk haven asset outside of the U.S. dollar. I don't think you have to go far to kind of think, why would anybody want to own U.S. dollars with the prospects of the integrity of the purchasing power and the intrinsic value, you might say, imploding? It really is a hidden devil, you might say, that has entered into our world, which is basically the fact that at some point, this money that's being printed in the trillions of dollars, and it's got to be paid somehow, and the question is, how it's going to be paid, whether it's going to be paid and reflected in Main Street through inflation or hyperinflation, or it's a question of a zero-sum game. So as we move more aggressively into the end of this year, which is one for the books, we're taking a look at a new administration as we come into next year, and at least that's what appears to be. But there's some confusion there as to, the political challenges that Trump is bringing in. Um, we've never been in this situation. And so it's highly, highly volatile, but nevertheless, regardless of this political rhetoric, the fact of the matter is that the economic system underneath this political agenda, whether it's Republican or Democratic, or is moving into a whole level because of this pandemic, and I think more than anything else, it's moving into the hands of this elite group that created the Federal Reserve, that created basically this concept of fiat currency, creating a stimulus to support the economic growth of a country, which is the Keynesian economic philosophy. But if you do a little history of it, we're looking at a socialistic model pretty much. The more the government takes control, obviously in socializing a lot of these different levels or sectors, you might say, particularly in the financial markets. One of the things that has continued to support the equity markets is the fact that the stocks have taken the word of the Federal Reserve that they will be the buyer of last resort. And so you don't have to worry about the collapses, you might say, if we see in the bond markets, corporate bonds, junk bonds, or ETFs, or in the stock market in general, because we got Uncle Sam that's going to come in and save us. If you believe that, I got a bridge to sell you, my friends. And that is the biggest misrepresentation that has some serious consequences. It's great. Yeah, the government can come in and they can pump and print as much money as they need to into the system. But what do you do when the system is not growing as a consequence? We're not seeing economic growth. So we are dealing with a current situation that is historic in that it's in the middle of a transformation again from the old physical system into a new monetary system that has yet to be defined by us. But I think we pretty much can see, the writing on the wall, so to speak, that we're definitely looking at some kind of a virtual world, a virtual currency. It's a question of whether this world is going to be regulated or not, and how much and how far, and see how involved basically our government becomes with issuing this virtual currencies, or replacing, you might say, the U.S. fiat dollar, with a virtual currency, creating a separate world that is called a virtual economy, a virtual world. We're retrieving back from the sell to level of 1858, and now we're beginning to form what looks to be a bit of a double top in here. So we've built this resistance trend line here, and I'm pretty much following the volatility of the market as it unfolds, and what it is creating from a geometric technical analysis point of view. And so now I have the level here that identifies 56.90 as a strong level of resistance. And you begin to see the market supply begin to come into the market here. The buy-in that occurred in here was not strong enough to get through that 1858. And so this is a little bit of a top or selling pressure that we're getting at this 1858 level. So we've activated a short trigger on 1856.80, and we're looking at the target below is the weekly 1849. And the daily sell one level of 1844 becomes the target of this daily signal here if it doesn't get stopped out. So we've accomplished another $330 target. And so, we keep adding it to the kitty. Take your profits, $300, boom, in. So now we have $3,640 made on the gold market day trading, swing and day trading. We recommended this morning, again, to all of our subscribers in our private trading room. In fact, early this morning and throughout the night, we update the live trading room. And we are very active in sharing pretty much, this intelligence with my subscribers here that I'm using to execute. Yeah, so at 4:22 a.m., we took profits, recommended to take profits. 1858 was the target. As the targets were completed, pretty much we keep updating this trading room, which is primarily for serious traders that want to have access to a methodology that is an intelligent methodology, and it, pretty much it's applied for real trading, transparently, live trading, streamlining, live streaming in Ticket Talker. We continue to hold this short position here. In fact, when the market now is entering equity on you, then, you can begin to either trail it with a stop, or if you get your target, to lock it in. But if you are still short, you use your trailing stop to break even. This is the only time that I recommend my traders to use a straight stop, pretty much, when the position is beginning to enter into a profitable level. And you can hold on to it if you want to maximize the targets below. What you do is you hold on to it and you trail the stop until the target is completed. So it's all a matter of how you manage the risk based on your profile. Again, as I said, how I manage the risk might be a little different, than you, because just because I've been around a little longer, and also I've been pretty much trading this system, for many years. And so, but it's a question of how you manage the risk and the application of this incredible intelligence in your portfolio that makes the difference. You can see the intelligence here being executed live and the resolution to validate the intelligence. We published our latest report in Seeking Alpha yesterday, and we pretty much looked at the targets again that we're sharing here with you today. Prospectively, the sell one level, the weekly target is 1874. The sell to level is 1898. So the initial targets on the gold, 1870 to 1874, were published December 11, prospectively. So this is how accurate the VCPMI identifies for you the momentum of the market, the extreme level above or below the mean or the average price, and it identifies for you where the highest probability to execute those trades are. When the market activates those signals, the AI tells you when to enter the market, as I'm doing it here, showing you, executing the signal, trading the signal. So if I can do it, and you are a committed trader, and you're willing to be disciplined, follow the orders, the instructions the artificial intelligence gives you, and you manage your emotions accordingly, you stand to be a very successful trader if you get out of your own way emotionally. And I think this has been the most incredible asset that I've been able to use from the VCPMI, in that it puts my emotions on check. We're dealing with a very difficult point in time, a highly volatile point in time, where things are changing rapidly. Profound changes are taking place that I believe are catching many people, even including myself, by surprise. That we have gotten to this place where it is a bubble, a debt bubble, and it's just exploding. And it doesn't look like it's going to change anytime soon. We're living in a debt economy. Market is finding a little bit of buyers here. And so we just allow for the market, to do what it's got to do. But in the meantime, I've already locked in some really nice profits here across the board on my derivatives, my stocks, and that I am carrying. So it's Christmas came early. Actually, Christmas came in on the 15th for me and for my subscribers, my traders. So take advantage of it, lock in some profits, my friends. Things are getting a little bit quiet here, settling down here, consolidating the gains for the day. When the market, just to review, when the price is entering into the red levels again, and you're looking at the daily here of 1844 to 1858, this whole area is considered distribution of supply when you see it in red, from the sell 1 to the sell 2. Mathematically speaking, from the sell 1 to the sell 2, you're looking at a 95% probability that if the price is activated, it will revert back to the mean. The higher the price goes to the sell 2 level, the higher the probability of a reversion to unfold. If it doesn't revert and it closes above it, then it negates the daily system to go neutral. Closing above 1858 makes this resistance level the support level for the next target, which is the 1874. By integrating the daily system, limiting the pivot points to 5 levels, and integrating with the weekly numbers and the wave counts. So you can see the price, or the wave, you might say, of the daily integrating now into the weekly numbers, which confirms again that the market is now activating a bullish weekly price momentum. It doesn't mean that it cannot trade, on the lower end of these levels, but the trend is clear. The bigger trend is clear. The difference is that we've come into some selling pressure or some potential area where we can see sellers or supply come into the market. And that's what we are allowing to happen. Profit taking, from here, markets that bought at 1767 when we recommend it. You're looking at almost $100 move up here in just the last few weeks. So be prudent. If you have profits, lock it in. Don't get greedy. Don't follow the herd. Because right now, if you put on the news, you probably will have the sentiment at one of the highest, most bullish levels on the internet, or CNBC for that matter. And so you want to caution, because the VCPMI actually is a contrarian indicator. When everybody is buying, it probably will be telling you sell, or it probably will be at the area of distribution of supply. This is like a GPS for your trading. It identifies the extreme levels of the supply and demand. Once you identify the average price, it can extrapolate those extremes above or below. And using the reversion to the mean principle, we look for the highest probabilities when the market identifies these levels at the extreme above the mean or the extreme below the mean. If we close under 1849, which will be the weekly average price that will remain for the rest of the week in place, it would activate the bearish. First of all, it would negate this uptrend that we're in to neutral. And then if it closes below, it would activate the bearish price momentum, and it will reinforce basically the short signal that occurred this morning at 5:45 a.m. And here, all these tests also represent trade alerts, and the close, the latest one was this close at 1855 on the short side. So once again, just to recap here, our swing positions as we came into today have been completed at the extreme above the mean of 1858. We've locked in profits, we've booked profits, we've hedged up here. And are looking for a reversion if it's going to occur back down to that 1840 again to test at 1849. I want the market to test these levels again here as we move into the next couple of weeks. It's being supported by seasonal patterns, short-term cycles that validate basically that we could be going into a little bit of a correction from here. So the uptrend move, I believe, was completed at 1858 this morning. And now we're going to revert back potentially, ideally, to test at 1840. Oh boy, what I would love to see it come down and test at 1832. What you're looking at here in the chart is on the left, the daily buy one level of 1818 and the buy one weekly of 1819 that essentially supported the rally that we saw here at 2:15 a.m. yesterday. And this rally now has been completed, and potentially what we want to see is how this level is tested. 1819, 1818 is a harmonic level. It's a harmonic alignment so far that you see here that we seem to be integrating the daily prices with the weekly prices. And so that becomes in the most optimal entry point from a probability point of view. This identifies the harmonic alignment that we talk about. continue to hold your hedge position now up here on your long-term assets, and use the short-term aspect of the market to sell against for short-term reversions, maybe coming back down into this 18-19 level. If we do get into this level of 18-19, then you want to cover your shorts and let the market dictate where it wants to go from here once the price comes down and completes this pattern. So we are holding our long-term core position hedged, and we are selling basically the short-term market, looking for 18-20, 18-19 as a target. Things have gotten pretty quiet here, and I'm pretty comfortable where we are right now. So once again, it's time to lock in, hedge, take some profits off the table, book, and take advantage that Christmas came a little early for us. In the meantime, my friends, thank you again for the privilege of your time, and please take care of yourself. Be well until next time. I'll talk to you soon.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
The Ticker Talker app brings the powerful trading technology tools of the Ticker Talker desktop platform into the hands of its users who are on the go. Ticker Talker connects novice and advanced traders with industry leaders who are providing real-time trading content throughout market hours every single day. The Ticker Talker app allows traders to follow and get real-time push notifications of trading leaders' trade ideas, all while on the go. Ticker Talker leaders host interactive live trading rooms which provide all-day coverage of their trading ideas and methods seamlessly with social chat for real-time feedback from the expert community of Ticker Talker's powerful user base. Set up and/or subscribe to automated trading